Let's talk about government policy. It's interesting. We have a hearing on the Hill today talking about Facebook. It's going to be interesting to see what regulatory changes come about as a result of that. But the biggest kind of obvious, most clearly defined interference by government in markets has been in China. What do you make of what we're seeing there? Does it change your attitude towards China? China's very hard to avoid if you are simply investing in indexes, but what is your attitude as a hedge fund towards how the situation is changing?
Look, I think if you are investing in markets, it's impossible to have no view about China. It is too big a portion of the markets out there. It's too big a portion of the global economy to ignore. So you have to have a view. And I think the bid in China is to work out where there are financial opportunities and where they are going to be curtailed by government policy. In China, they tend to be more explicit. I think, we went through a period in the West of deregulation for 20 years, 30 years. I don't know, it was a sort of a long train of increased deregulation. Increased regulation started coming to financial markets after the financial crisis and has been coming to a lot of different sectors and more in the West. So what China is doing is quite explicit, but it's not that different than what we see in a lot of the Western markets. So I think what it means is you have to be lighter on your feet. You holding something with a 10-year view really doesn't make sense in a world where you get these interventions, where you get significant changes in policy. And so, I think what it requires you is always to have, let's put it this way, we would always say have liquidity in your positions. If you don't have liquidity in your positions, then you need to get a significant premium for the fact that the tail risk from interventions is significant. And, we've seen some of those numbers in China being really quite significant. Our view is it carries on. The Xi Jinping, one of the things is he changed rules so that he can be re-elected for longer and longer periods. But he hasn't yet been elected for the next period that's coming up in sort of the next year. And so it's really important for him that, he has the party on his side for that process. Who knows exactly how it happens within the Chinese Communist Party, but there is a process. Yep. And, it's important to him that he comes out on top of that process.
As that process unfolds, is China investable, or are the risks, because they are quite hard to define, make it significantly less attractive?
I think it definitely makes it less attractive than it was a year ago. You can see, the trends which people were taking advantage of, the big winners in the tech space and some other spaces, those have been broken. And so now you have to invest in the knowledge of, this sort of shared prosperity idea that they have in China and how that's going to affect things. And, you need to make sure that the things you invest in are on board with the government, sort of the zeitgeist of what they're trying to achieve. That creates some opportunities, and it definitely creates some shorts where there are many companies which the market hasn't yet worked out are really not pulling the way the government wants them to pull.